I mean, the Asian central banks in particular don't really have very much appetite for any of our fiat currencies. So you can see why that any dip in gold, anything that comes on offer, they just basically snap up. And that's what's been happening. And the liquidity in the system, of course, has moved over to COMEX from London, Switzerland and elsewhere. That's where any liquidity is now. But we don't know what's happened to that liquidity. I mean, the stands for delivery are basically accelerated.
In today's update, silver prices have climbed close to $33 during North American trading hours on Wednesday. The metal is showing strength as fears of a major trade conflict between the United States and China have eased, following positive signals from President Donald Trump about the prospects of a deal with Beijing. Speaking at the Oval Office on Tuesday, Trump expressed confidence that negotiations with China are progressing well and voiced optimism that an agreement will be reached. He mentioned that while tariffs wouldn't soar to 145%, they also wouldn't be eliminated completely. Typically, a reduction in global economic tensions would lessen the appeal of traditional safe haven assets like silver. Despite this, silver continues to gain ground, largely due to strong industrial demand. The metal is widely used across sectors like electric vehicles, electronics, power infrastructure, and mining. Investors believe that improving relations between the two economic giants will support overall economic growth, boosting demand for silver in the process. Meanwhile, a mid-session pullback in the U.S. dollar has added further support to silver prices. The U.S. dollar index, which measures the greenback against 6 other major currencies, gave up earlier gains and slid back toward the 99 level. This dip occurred even as Trump worked to dismiss fears about potentially firing Federal Reserve Chair Jerome Powell, although he remains frustrated with Powell for maintaining what he sees as overly restrictive interest rates. Now, we're about to show you some of the best moments from the latest interview. But before we get into that, make sure you hit the subscribe button, turn on notifications, and check out updated numismatics handbooks.
Capital, the tick figures that they produce. So that's always, sort of looking back a little bit, but not terribly far. And if you add up all the components, foreign ownership of financial assets, and we're talking about US treasuries, we're talking about short-term debt, including bank deposits, and we're also talking about corporate bonds, and we're also talking about equities. Total all that up, on the most recent tick figures we have, we're looking at about $39 trillion. So that gives you an idea of just, if, let's just say, the foreigners really do get scared, most of that is going to disappear out of the dollar, and it's going to be so destructive as to be enormous. I mean, it's as simple as that. Now, obviously, there is a bit of a rescue operation going on because, the Treasury understands this. They produce the figures, after all. They can see. I mean, they're not stupid. It's as many commentators seem to think. They can see exactly what's going on. They know the fragility of the situation, which is why Scott Bessent, in particular, has been backtracking on Trump's policies. And I think that Scott Bessent has made it absolutely clear to Trump 2 things. First of all, his tariff policies are going to destroy the economy. And what it'll do is just everybody will be getting the hell out of the dollar. And I think the other thing that he's told Trump is, look, you talking about sacking Jay Powell is the worst thing you can do. You are destabilizing the whole of the financial system. Stop it. I doubt if he's been much less blunt than that. The result is that markets have stabilized. We've seen the price of gold fall, or more correctly, the dollar rally measured in gold. $270 change, really. And of course, any real stuff comes out. I mean, don't worry that the Chinese and the Russians and everybody else will be grabbing it with both hands. So, but basically, we've got a little bit of stability, I think, on the back of that. Everybody relieved that these thoroughly destructive, financially destructive policies of Trump's have been sat on by, if you like, the establishment. Let's put it that way, the permanent establishment. And as to whether this is enough to turn the dollar around and stabilize it, I think not, because remember, there were two things which I've been talking about. One of which, of course, was the destructive forces of Trump's tariff policies. And the other is the credit bubble. And the credit bubble basically has started to burst. Just look at the equity indices. Look at some of the more ephemeral things like Bitcoin and so on. I mean, okay, Bitcoin are rallying, they've got a bid. But, if you like, the markers, if you like, of excess credit have taken a hell of a knock. And while they might rally somewhat, I think that the confidence basically is gone, if you like, upon which credit really depends. So I think that's the first thing. I think the second thing is that if you stand back and you think, okay, we now have an America with a president who we can't really negotiate with, because he's effectively being cut out of the loop. I mean, this is really what it boils down to. He's on the run. This art of the deal, forget it. The art of the deal has actually worked against him.
In today's update, silver prices have climbed close to $33 during North American trading hours on Wednesday. The metal is showing strength as fears of a major trade conflict between the United States and China have eased, following positive signals from President Donald Trump about the prospects of a deal with Beijing. Speaking at the Oval Office on Tuesday, Trump expressed confidence that negotiations with China are progressing well and voiced optimism that an agreement will be reached. He mentioned that while tariffs wouldn't soar to 145%, they also wouldn't be eliminated completely. Typically, a reduction in global economic tensions would lessen the appeal of traditional safe haven assets like silver. Despite this, silver continues to gain ground, largely due to strong industrial demand. The metal is widely used across sectors like electric vehicles, electronics, power infrastructure, and mining. Investors believe that improving relations between the two economic giants will support overall economic growth, boosting demand for silver in the process. Meanwhile, a mid-session pullback in the U.S. dollar has added further support to silver prices. The U.S. dollar index, which measures the greenback against 6 other major currencies, gave up earlier gains and slid back toward the 99 level. This dip occurred even as Trump worked to dismiss fears about potentially firing Federal Reserve Chair Jerome Powell, although he remains frustrated with Powell for maintaining what he sees as overly restrictive interest rates. Now, we're about to show you some of the best moments from the latest interview. But before we get into that, make sure you hit the subscribe button, turn on notifications, and check out updated numismatics handbooks.
Leave a foreigner's idea about the dollar. Does it mean that they're suddenly, oh, thank goodness for that, it's all right, we can go back into the dollar, we don't need to sell any dollars, we can continue to buy US treasuries and all the rest of it, we can continue to invest in equities, whatever. No, I don't think so. I mean, foreigners basically have seen inherently an aggressive and, if you like, an aggressive America against their own interests, against every other nation's interests. They see the backing, if you like, that Trump has had from voters in the recent presidential election. And they can see that while the deep state might be regaining control, it's not necessarily going to be good for international trade relations. We've already seen, I think, quite a lot of damage done to supply chains and things like that. It's destabilized everything. So now what we have is we have the problem. If you look at the dollar, How are you going to stabilize the dollar? Well, I mean, the best way to stabilize any currency is to raise the interest rates, which we know is not what Mr. Trump wants, but Mr. Trump really has no say in it anymore. So raising interest rates is not something also that the Fed really wants to do, because the economy is already sliding into recession, which basically means that the budget deficit is already going to increase more than previously estimated. And under those circumstances, foreign lenders, if you like, to the US government will understand that the government is in a debt trap, is not escaping from that debt trap, and that's the real issue. I mean, you know, on the tariff side, it may not be quite as bad as the first scares from Trump suggested, but, you know, it's still not a good situation. And with the US government in a debt trap, what price their bonds? I mean, the answer basically is that the yields have got to rise. And as the yields rise, the situation for US government finances, federal government finances, get worse. So, you know, where does it end? I mean, the answer is you cannot see an end to rising interest rates under the circumstances which have been triggered to a large extent by Trump's capriciousness over trade. You know, so we're going to have higher interest rates. We're going to have higher bond yields. And there is actually very little that the Fed can do about it. The important point as far as Jay Powell was concerned was he knows he's sitting on a volcano here. And he was, the last thing he wants is to have a president, you know, banging off in the long grass about how terrible he is and how he ought to get interest rates down, you know, trying to undermine him. I mean, that's very, very bad. And I would say that the damage that has been done has not been mended. And I don't think it can be mended. And it's just alerted everybody to the problems, if you like, of dealing with America in the future. I mean, look at BRICS nations. Who are they going to align with? Who are South Korea and Japan going to align with? Look, they do a lot of business with America. Are all the tariffs going to go? We don't know. We can hope that there'll be a sort of, if you like, you know, backing down on the tariffs side. But, you know, this mess, I think, convinces everyone outside America, look, you know, you've got to have a plan B. You can't rely on these Americans. You know, it's just nonsense. Have a plan B. And the plan B, of course, is to go cozy up to China, because what does China do? China trades, and not only that, but it'll provide you the capital to develop your own economy. What's not to like? So that's where we are. I think this is a very, very important week in terms of the loss of faith in the administration. And not only that, but this will be reflected in loss of faith in the dollar, faith in the credit of the dollar. So one way and another, I can see a small dead cat bounce, maybe. I think that's what we've got at the moment, but dead cats don't bounce too far. And after that, nothing has really changed. So if you like, in the way the press put it, looks like the gold price will continue to rise. The way I'd put it, the dollar is in a bear market and is continuing to be in a bear market.
Shifting gears a bit, what's your opinion on Alasdair's idea that real wealth is created when the crowd is looking the other way and opportunities are being missed? Do you agree with Mal's argument that we could be at the start of a major commodity supercycle fueled by years of underinvestment and tighter supply? Or do you believe the recent surge could actually mark a top, and that a major bear market for gold and silver might be around the corner? More importantly, how are you positioning yourself in these markets right now? I really want to hear your drop your thoughts in the comments below. Now, go ahead and check out this next video because it's absolutely spot on for you. I'll catch you over there.